In this video, I wanted to explain home equity and how it can be utilized with multiple programs. So, just really straightforward, what is home equity? Clearly, if you take your home value, the current market value, in this example, the $425,000, minus the current mortgage of $150,000, it leaves home equity of $275,000. So, there's a lot of home equity out there for a lot of folks. And if you look at the graphic, there's $11.03 trillion of unused or untapped home equity in the United States and $6.2 trillion for those over age 62, which is what you need to be in order to qualify for a reverse mortgage. So there's a lot of equity out there. Well, if we look at ways that you can increase your equity in your home, certainly you could make home improvements. So you could, spruce up the house, you could add a room. There's lots of things that you could do to increase the value of your home. You could just continue to own your home and, continue to let inflation and rising real estate markets increase your home equity. You could also pay off some or all of your mortgage or other debt on the house, and that increases the equity, right? So if you go back up to the example, $425,000 with $150,000 mortgage, if you paid down $50,000 of your mortgage, right, that would increase your equity by the $50,000 because you put that money back into your house. Those are just real simple examples. So popular ways to tap into your home equity. The first one is a home equity loan. This is going to your local bank and saying, hey, I just want to borrow some money on the equity of my home. That's pretty traditional. Lots of folks have done that. That is where you get a chunk of money up front, and then you just start making payments on it, typically referred to as a second mortgage. You could also do a home equity line of credit. A home equity line of credit is where you go to the bank and say, I want to access the equity in my home, but I don't need it all, or I don't need any of it right now, and you just open up a line of credit. Let's say they give you a line of credit of $50,000 or $100,000, and then you can access that money as you want to. And then once you take money out of the line of credit, then you need to start making monthly payments. You could also do a cash out refinance. So that's where you go in and say, look, I currently have a $150,000 mortgage. I want to borrow another $50,000. So you're going to do a $200,000 refinance, paying off your existing $150,000 and putting $50,000 in your pocket. And the final way is kind of a popular way is to just sell your home. If you sell your home, then you put that $275,000 minus your closing costs, real estate fees and closing costs. That money would go into your pocket. And those real estate and closing costs generally range about 10% of the total sales price, because it is 6% going to the realtors of the sales price, and then you've got title and all the other appraisal fees, all the fees that go into a typical sell of your home. Well, the HECM reverse mortgage, the home equity conversion mortgage, reverse mortgage, that sounds a little bit like a duplication of things, but we all in the industry and most lay people call that mortgage a reverse mortgage. The government calls it a home equity conversion mortgage, the HECM, a home equity conversion mortgage or reverse mortgage. Over 1 million seniors have already utilized the reverse mortgage to tap into the equity in their home. And what's interesting about the reverse mortgage is you can use it in many of the ways that we've looked at up here, the home equity loan, the line of credit, or a cash out refinance. Because with the reverse mortgage, this is a very flexible loan. You can take the money out as a lump sum. That's an option. You can just say, pay off my existing $150,000 mortgage up here, and there's an extra 50 or whatever thousand left. You take that money and put it in your pocket and go do whatever you want with it. You can do it as a line of credit. So as a line of credit, you can open it up and not take any of the money out and just access it when you want it or need it. You can also do fixed monthly payments. So with the fixed monthly payments, we set the reverse mortgage, the HECM loan up, and you start getting monthly income directly from the lender for the rest of your life. And then the last option is you can actually do any combination of these things. So, I've written down here you can do both monthly payments and a line of credit. You can actually do all three. You could say, I want $25,000 of cash, I want $1,000 a month of income, and leave the rest on the line of credit. And of course, we have software that'll calculate exactly how much is available in any of those scenarios for you. If you compare this to a traditional home equity line of credit, the HELOC, then it helps you see the real value to this. So with the HELOC, the unused portion doesn't grow, right? If you open up a line of credit for $50,000, it's $50,000. With the home equity conversion mortgage line of credit, if we open up a line of credit for $50,000, it grows at whatever interest we're charging on any money that you've actually borrowed. So for example, let's say the interest rate is 5%, and let's use $100,000 for easy math. You borrow $100,000, or you open up a line of credit for $100,000, and you don't use any of the money. Next year you've got $105,000 available, and that's guaranteed by the federal government. So that's guaranteed to grow. You don't have to worry about it. They cannot be frozen or reduced. If you remember back to the days of the 08, 09, the crisis, right? People that had the regular HELOC, they got their loan frozen or even reduced. So you might have had a $50,000 line of credit. They could have come in and closed the whole thing or reduced it to $25,000 or anything. That cannot happen with the home equity conversion mortgage line of credit. This is guaranteed to grow anytime you don't use the money, and it's guaranteed to be available anytime, guaranteed by the federal government. You don't have to worry about what the lender's rules are. The ongoing monthly payments. So when you look at ongoing monthly payments that are required in a traditional home equity line of credit, right, you have to make the monthly payments the very first month after you get the money. So if you get $50,000 this month, next month you have a payment. With the home equity conversion mortgage line of credit, there are no payments required. So you can make a payment anytime you want to. So if you wanted to make a payment next month, you want to pay interest only, you can do that. You want to pay some interest and principal, you can do that. You want to pay nothing, you can do that. You don't ever have to pay it back for as long as you live in the home. So if you move, sell, or die, then the loan is due and payable at that point. But up until then, totally flexible. So if you look at a predefined due date, right? So with a traditional home equity line of credit, there is typically a 15-year line of credit, and then they close it. Some can be even shorter than that. With the home equity conversion mortgage line of credit, there's no such thing. This is a line of credit that's available until you move, sell, or die. And it's open until that happens. Is it a non-recourse loan? So non-recourse means, can the bank go after any of your other assets if you don't pay? Well, for the HELOC, you can see there's no check there because they can go after your other assets. They can force you into bankruptcy, right, if you don't make your payments. With the home equity conversion mortgage line of credit, it is a non-recourse loan. They cannot attach any other assets. The home alone stands for the debt. You never have to worry about making a payment on this loan. Mandatory pre-loan counseling. In a normal bank loan, there is no counseling. If they can talk you into it, you sign the documents, you've got the loan. With the HECM line of credit, they are required to have you go through HUD counseling, and this is done by a third-party credit counseling agency, and you have to do that before we can even start the loan documents. And so this is really the safest loan because we want to make sure that you understand every aspect of this loan. So very safe, and it does provide a lot of benefits. So with that, I want to let you know that on my next video, I'm going to give you a special offer that's going to save you thousands of dollars in originating a HECM loan, a reverse mortgage. So definitely stay tuned and watch the next video that you get. The next email will have that attached to it. Thanks for watching and listening today.